Hey guys, what is going on? Welcome back to the portfolio. Welcome back to the channel. Great to see everyone back on the YouTube series as always. And as I do with every video, I want to start off by saying thank you to all the viewers and all the subscribers supporting the channel. I immensely appreciate that. For today's video, I want to respond to one of the viewer questions in a comment thread recently, why I've switched over to doing a lot of options investing in lieu of dividend investing. I'm still doing dividend investing, but as you guys have seen on the channel, I've been posting quite a few videos on my options returns, which have been quite substantial of late. And I do a lot of those returns with options by doing cash covered, cash secured puts, which I've talked about in a video as well. So I definitely want to go through that. That was one of the main reasons in which I switched over to options trading, understanding that I can actually get paid for putting orders into Robinhood. And not only do I get paid by putting the order in, but I'm also putting in an order that hopefully I'm buying the stock at discount. So I'll kind of go through all of that in today's video. But before we do that, let's quickly take a look at the portfolio. As you can see here, portfolio down almost $11,000 today, $10,700, 1.28% of the overall portfolio in active hours trading. Did recoup some of those losses in after hours trading, 0.27%, 22.50 in the green. But overall, a very poor day of investing, of trading today, down about $10,000 or $11,000. But let's go ahead and scroll down to Ford Motor Company. I'll use this as an example, again, highlighting how you can actually get paid for putting orders into Robinhood and then also buying the stock potentially at discount, which essentially is a cash secured put. But for new viewers on the channel, I definitely want to go through and walk you through the different ways in which you can buy stocks, highlighting the cash secured put in the options trading category where you actually will get paid to put that order in. And not only that, if the order doesn't execute, you still get paid. So it's a very good way of boosting returns and also buying stocks at discount. Ford Motor Company here you can see is the largest holding in the portfolio. Portfolio diversity, 39.2% of the overall portfolio. And you can also see that total return, which is one of the better returns in the portfolio, 186,759, 156% overall with Ford Motor Company. But I want to go ahead and take a look at the trades here. So if we go to the bottom right-hand corner, you see a large button for trade. If you click on that, you can see trade options, which we'll talk about. That's how I'm putting in most of my buy orders at this point, and I'm getting paid to do that. And then you also can see the buy at the bottom. If you push buy in, this simply defaults to the market order. You can put in an order, for example, let's say 100 shares, and you can see the current price would be $19.52, and the estimated cost is $1,952. If you put that in, you're not guaranteed to get exactly that estimated cost. It's whatever the market price is. If the stock is moving quite substantially, that may be higher or lower, again, depending on where the stock is moving. However, if you click on shares in the upper right-hand part of the screen, there's a whole series of new orders that pop up. Market orders would be the ones up on top, which we discussed. You can see all of these other conditional orders on the bottom: recurring investment, limit order, stop limit order, and trailing stop order. These are much more powerful orders. Limit order, for example, you're setting a price or the maximum price at which you're willing to pay for a stock. Your order will only be executed at your limit price or lower. So as you can see here, as the price of the stock trends down, at some point hit your limit order price and you'll buy it for that price. So you're guaranteed never to buy it higher than that price. And for example, if you want to do some automated investing, let's say Ford Motor Company is trading at $20. Let's say you're comfortable buying at $18. You simply put an order price in for $18, and you're always going to get that stock price at $18 or lower. It'll never execute higher than that particular price, which is very, very powerful. And there are a few other more complicated orders here as well. Stop order. If the stock is trending up, there's a stop price in which you'll go ahead and buy the stock. So you're essentially trying to catch it on the upswing. Buy low, it'll continue swinging up, and then you can possibly sell it off as a day trade. A number of other orders as well. Stop limit order and trailing stop order. I have another video kind of discussing those. But anyway, so you can simply put the order in, either a market order, which you're not guaranteed for a price, or a limit order, in which you're for sure guaranteed the price, that price point or lower. But there's a better way of doing this. So you can actually go to that trade button again and push trade options. You can see there's a whole number of options that pop up. These are options contracts. You can see up on the top there, we can toggle, buy or sell call or put. And what we'll be doing is selling off a put. So sell put, this is a cash secured put. If the price of the stock gets under your strike price, which we'll talk about, you'll be required to buy at that price. But the most important part is that it's just like a limit order in which you'll get paid to do. So for example, up on top here are number of expiration dates. This is how long the contract will remain in force. Up until December 23rd, you'll have the obligation to buy the stock if it gets under your strike price. Now on the left there, you can see a number of different strike prices. $20, $50, for example, $20, for example, $19.50 here. So these are all strike prices. If the stock gets below that price, you'll potentially have to buy the stock at that price. But again, it's just like a limit order, but you'll get paid to do that. So let's go ahead and do one at $19 on the screen here. And you'll see this opens up a whole new window. If we do $19 here, there's a number of metrics which we don't need to be overly concerned about for this video. I have discussed this on prior videos, and I'll do an updated video moving forward. But we go to the sell button, and up on top, each contract is 100 shares. So if we want to buy 100 shares of Ford, again, one contract, we'll get paid $123 to do that contract, and it's going to be costing us $1,900. 100 times 19, that's potentially what you'll have to put up for this trade. You can see the max loss will be $1,777, essentially $1,900 minus the amount of credit that we'll be getting in options premium, $123. So this is a very powerful trade in which we're getting paid to do a limit order. It's exactly like a limit order, but now we'll get paid to do that. So if you're comfortable buying the stock at market price for $19.52 or a limit order for $19, this is even better because now you'll get paid to do the limit order. So this is why I initially switched over to doing a lot of options trading. And then I started doing quite a few cash secured puts, and I'm actually making way more money doing that than I ever did with my options investing. So just quickly wanted to go through that, why I switched over to doing a lot of options investing. And currently I've been putting up videos discussing my returns, and those have been way higher than any of the dividend payments I've been receiving on the portfolio. I've also been doing monthly dividend reviews, and 1 month of options trading is worth probably 5 or 6 months of dividend investing. So that's how powerful this strategy can be. And again, you're putting orders in on stocks that you're already comfortable buying at a particular price. So I wouldn't be putting options orders in for AMC or GME, some of these very high risk stocks that can trend up or down quite dramatically. Only do this strategy in stocks that you're willing to buy at a particular price point, and then holding for the longer term if they do continue to trend down and you cannot sell those off. But again, just wanted to respond to a viewer why I'm doing a lot of options investing, and that is why. I learned quickly that I can make quite a bit of income by doing these contracts. And not only do I make income on the contracts, but I also buy stocks at prices that I'm comfortable with at discount. So that is why I'm doing a lot of options investing. I hope that answers the question for the viewer that did ask that in the comment threads. I hope I didn't go through that too quickly. If I did, please let me know, and I'll try to do as much as I can in the comment threads to respond. If not, I'll do an updated video on why I'm doing cash covered puts as in the form of my limit orders on Robinhood, getting paid to do limit orders on Robinhood. So that's what I wanted to talk about today. With that, I'll kind of end the video. Again, if you guys have questions about this video, please let me know in the comment threads down below. If you guys do enjoy the videos, if you do enjoy the content on the YouTube series, feel free to like, share, and subscribe. Until next video, we'll see you then.